Okay, dear students, in the previous class, you studied the different forms of business organizations. In brief, I explained what is sole proprietorship form of business, what is partnership form of business, and also company form of business, and what is the meaning of company. In brief, I explained the definition of the company and important features, and also I covered the different types of companies in brief. In today's class, you are going to learn, about the share capital of the company. Share capital. Share capital. What is the meaning of share here? See, whatever the amount of capital is required to start a business, that will be decided by the directors. Try to understand here. Assume the board of directors or the company needs rupees 10 lakhs. Rupees 10 lakh is the amount of capital which is required. Now this 10 lakhs will be divided into small fragments or small units. Each unit is called as a share. Very simple thing. Here 10 lakh is there. Here the entire amount of rupees 10 lakh is not collected from one or two persons. Here what the company will do? Company will divide this capital, this amount into small fragments or into small units. Therefore, such a small unit is called as share of the company. Share of the company. Very simple thing is there. Try to understand here. Assume here 10,000 units company is going to make. 10,000 units. Therefore, here per unit we get how much? Rupees 100. Rupees 100. This rupees 100 is nothing but value of each unit or share. What is this? This is the face value we call. What is this? Face value of, what is this? Rupees 100 is nothing but the face value of a share. Suppose a person wants to become a shareholder of the company. If he purchases a share by paying rupees 100, he will become the shareholder. That is the meaning. Here, whatever the amount of capital is required by the company, that amount of capital is divided into small units. Such units are called as shares. Therefore, whoever is interested to become a member is required to purchase such shares. Even if a person purchases a single unit, he will become the shareholder of the company. Therefore, we can give the meaning of a share like this. Share is nothing but a unit or part of share capital. This is the share capital. 10 lakh is the share capital, and this is divided into 10,000 units. Each unit is called as a share. Therefore, share is nothing but a part of share capital, or it is a small unit of share capital. And one important aspect you need to understand here, rupees 100 is the face value of share. Face value of share. But company is not going to collect the entire amount in one lump sum. What is the meaning of this? Suppose Mr. X wants to purchase one share, but he need not pay the full amount of rupees 100 in one lump sum to the company. Why? Because as per the Companies Act of 2013, this amount is required to be collected in different installments. See, what the company will do, company will collect this amount like this. Just I will write rupees 20 as application money, as application at the time of application, and rupees 20 as allotment money. Allotment money. Next one is assume rupees 30 as first call. First call. Next one is again rupees 30 as second and final call. Second and final call. Just try to understand here. What is the meaning of this? See, for collecting the amount of capital, what the company does, company will issue the prospectus. It will inform the public that company is interested to sell the shares to the public. Therefore, interested people can apply for that. Therefore, company will get the applications from different people. But at the time of application, company will put one condition, that at the time of application, you have to pay rupees 20 per share What is the meaning of this? Rupees 20 per share is required to be paid by the applicants at the time of application itself, but they have not become the shareholders yet. Here they become the shareholders only after the allotment, but at the time of application they are required to send rupees 20 per share. In this example, rupees 20 per share to the company as application money. I take one simple example. Here Mr. A, assume he wants to purchase 10 shares. 10 shares. That is why he needs to pay how much? Rupees 20 as application money per share. Means it comes to rupees 200. 200 is the share application money which Mr. A is required to send to the company. Next one is, take for example Mr. B, he wants to purchase 100 shares. Now per share he has to send rupees 20 as application money. Therefore, here Mr. B will send how much? Rupees 2000 to the company. In the similar way, assume Mr. C wants to purchase 500 shares. 500 shares, and per share amount comes to rupees how much? Rupees 20 per share application money. Therefore, the total application money he needs to send comes to rupees how much? 10,000 rupees. 10,000 rupees. See, this is the way how the application money is required to be sent by whom? By the shareholders, not shareholders, by the applicants. I use the term applicant here because here, listen here, this is the way how the application money is sent by the applicants. Here A, B, C are called as applicants, not shareholders, because company has not yet allotted the shares to A, B and C. Okay, fine. Here the important thing is, you try to remember, company collected rupees 20 at the time of application, and later on what the company does, the board of directors, they will scrutinize, they will go through the applications which have been received by the company. Then after that they will decide to whom the shares are to be allotted and to whom the shares are not to be allotted, or how many shares are to be allotted to different applicants. This decision will be taken by the board of directors. They enjoy the discretionary powers. That is why here here board of directors, they enjoy the discretionary powers which are given to them by the Companies Act of 2013. Therefore, here board of directors are going to take the decision of allotting the shares. Okay, try to understand here. Mr. A had applied for how many shares? 10 shares, and he has already sent rupees 200 as application money. Assume that board of directors accepted his application. His application is accepted and he is allotted how many shares? 10 shares. Allotment is made, okay, to Mr. A. What the directors will do? Here company will send one letter to whom? To Mr. A, stating that, see, we are pleased to inform you that you have been allotted 10 shares. After receiving this letter of allotment, you send rupees 20 per share as allotment money. Now you see, next installment he needs to pay. First installment he had already paid at the time of application. Next one is rupees 20 he needs to pay after the allotment. Here when he gets the allotment letter from the company, here Mr. A will send rupees how much? Again 20 per share. Again it comes to rupees how much? 200. He is required to be sent to the company as allotment money. Now Mr. A is called as shareholder of the company because shares are allotted to Mr. A. Next one is, come to B. Actually B applied for 100 shares. 100 shares. He has already sent rupees 20 as application money, and board of directors, they allotted him only 80 shares. How many shares are allotted to Mr. B? Only 80 shares are allotted, but his demand was for 100 shares, but here company directors decided to allot only 80 shares. Therefore, letter of allotment will also be sent to whom? To Mr. B, stating that you have been allotted 80 shares. After receiving the letter of allotment, you have to send the amount of rupees 20 per share as allotment money. But one important thing is, actually he has paid application money on 100 shares, right? His demand was for 100 shares. Therefore, 20 shares less is there. Here allotment is made only how much? How many shares were allotted to this fellow? Only 80 shares were allotted. That is why here 20 shares application money is there with the company. 20 into 20, 20 into 20, it comes to how much? Rupees 400. 400 is the excess application money is there with the company. What the company will do? At the time of allotment, Mr. B need not pay the full allotment money. It means, see, for 80 shares, how much it comes? 80 into 20. Allotment money is how much? Rupees 20 per share. Therefore, it comes to 1600 rupees, right? 1600 rupees. But already he has paid excess application money, rupees 400. Therefore, this 400 he need not send. Only 1200 is required to be sent as allotment money. Now, what the company will do? Whatever excess application money is collected, that will be adjusted towards allotment. Next one is come to Mr. B, C. Now, B has become what? The shareholder. A is also a shareholder. B is also shareholder. Now, C is there. Mr. C has demanded for 500 shares. Assume here C's application is rejected by the board of directors. Assume rejected in the sense what? Mr. C is not allotted any shares of the company. In case if shares are not allotted to Mr. C, now he is not called as a shareholder of the company. But what about his application money? Because how much amount he has sent? Rupees 10,000 he had sent. That is why here company will send a letter of regret. That is called letter of regret. What is this letter of regret? Your company sends letter of regret stating that we are very sorry to inform you that you are not allotted any shares of the company. Along with this letter of regret, we are returning the application money which you had already sent to the company at the time of application. Like this, whatever the amount was collected from Mr. C will be returned. Therefore, here Mr. C is not called as a shareholder of the company. This is the way how the company will collect the amount and allot the shares. But this discretionary power is enjoyed by the board of directors. Now, you see, in case of A and B, as and when the company calls, they are required to pay how much? Rupees 30 as first call and rupees 30 as second and final call. Here the total amount is how much? The par value or the face value of the share is rupees 100. Therefore, here rupees 100 company collects in the form of application, rupees 20, in the form of allotment money, rupees 20, and in the form of first call, rupees 30, and as final call, rupees 30. In this way, as and when the company is in need of cash, that time the company will inform the shareholders to pay the money. That is called, see, first time if company calls, that is called first call. Next one is again in the future, if company is in need of cash, that time again company will send a letter to the shareholder stating that you have to pay the second and final call rupees 30. Like this, rupees 100 will be collected by the company in different installments. These are called as the different installments in which the company collects the face value or the value of share. This is with regard to the share capital. Now, the capital is divided into different types. In brief, I am going to explain, try to understand here. First one is authorized capital. Next one is issued capital. Next one is subscribed capital. Number 4, called up capital. Next one is paid up capital. Number 6, uncalled capital. reserve capital, etc. Try to understand. In brief, I am going to explain it. Come to the first one, authorized capital. You know that at the time of registration of the company, here important document is submitted to the registrar of the company. That is called Memorandum of Association. Memorandum of Association is an important document which is required to be prepared and submitted to the register of the companies. In that Memorandum of Association, one important clause will be there, that is called capital clause. In that Memorandum of Association, the maximum amount of capital which a company needs in its lifetime will be mentioned. That is called as authorized capital. What is the meaning of authorized capital? This is the maximum amount of capital which is mentioned in the Memorandum of Association at the time of registration of the company. See why this is called authorized capital? Once the company is registered, it means whatever the amount was mentioned in the Memorandum of Association, authorized or permitted to the board of directors to collect it from the public. That is why this is called as authorized capital. Next one is, this authorized capital is also called as registered capital. Try to understand. This is also called as registered capital because this is mentioned in the Memorandum of Association at the time of registration. At the time of registration of the company, therefore, this capital can also be called as registered capital. And since at the time of registration this is mentioned, this is also called as nominal capital. There are different names to this capital: authorized capital, registered capital, and nominal capital. In brief, we can say that authorized capital is the maximum amount of capital which a company can collect or which a company can raise from the public by selling the shares. What the board of directors will do? Later on, board of directors will issue shares to the public and the amount will be collected. Therefore, this is the maximum amount of capital. You take for example 100 crores. 100 crores is the amount which is mentioned in the Memorandum of Association and the register of the company has permitted this. This is called as maximum amount of capital. It is permitted to raise this much of amount. Therefore, this is called as authorized capital. Next one is issued capital. And say that at the same time, the company is not going to collect the entire amount of authorized capital. What the company will do? Company will collect the amount as per the requirement. As per the requirement. Assume that the board of directors, they decide to issue the shares for collecting rupees 50 crores. Now company is going to start its business. For that, company is in need of cash. For that, what the directors will do? They plan to collect rupees 50 crores. Therefore, here 50 crores will be divided into small units, that may be rupees 100, rupees 500, or rupees 500, rupees 1000, like that. The value of the share will be determined by the board of directors, and after that, that will be informed to the public and public will purchase the shares. Therefore, here issued capital is nothing but a part of the authorized capital. 100 crores is the maximum amount of capital which is permitted to the company to collect. But here, board of directors are not collecting 100 crores. What they are doing? They are planning to collect only 50 crores by issuing the shares. Therefore, whatever the amount of capital they are planning to collect by issuing the shares is called as issued capital, or we can also say that this is a part of authorized capital. Next one is, what is the meaning of subscribed capital? Okay, fine. Here, the board of directors or the company is interested to sell the shares of 50 crores. 50 crores. But we can't say that the public will purchase all the shares, right? Here, one thing you have to remember, subscription means purchasing. Okay, subscribed capital means here the amount which is, the number of shares which are subscribed by the shareholders. Therefore, that total amount is called as subscribed capital. Assume the company has a plan to sell how many shares? 50, the shares worth rupees 50 crores. But here, the subscription by the public is made to 40 crores. That possibility is there. because whatever we want to sell, we can't say that everything is to be purchased by the public. No, it is the interest of the public to purchase. Therefore, here 40 crores is the amount of shares which are purchased by the public. This is called as subscribed capital. Sometimes it may be 50 crores. 50 crores is the issued capital, and here the shareholders are subscribing only for 40 crores. This is called as subscribed capital. Sometimes the subscribed capital may be equal to the issued capital. Okay, try to understand this one. In this way, we can say that subscribed capital, sometimes we can say that it is a part of issued capital, or sometimes subscribed capital may be equal to the issued capital if all the shares are subscribed by the public. Next one is called up capital. See, this step comes called up in the sense, once the shares are allotted, what the company will do? Company will start, asking the shareholders to pay the amount. Therefore, here called up capital means as and when the company makes a call, it is the duty of the shareholder to send that amount to the company. That is why whatever the amount is called up, that is called as called up capital. Assume out of 50 crores, here I am going to take 50 crores as the subscribed capital. Assume that all the shares were subscribed by the public. 50 crores is there. Now company wants to collect 40 crores. How much? Company wants to collect 40 crores. That is why here rupees 40 crores, when company asks the shareholders to pay the amount, that amount is called as called up capital. Okay, try to understand here. Subscribed capital is rupees how much? Rupees 50 crores. Now, company will ask the shareholders to pay the call money. Therefore, whatever the amount has already been collected by the company by calling to the shareholders to pay, that amount is called as called up capital. You take the value of the share is rupees 100 per share. Assume company has already called up how much amount? Rupees 80 per share. Therefore, here rupees 80 is called as called up. Here board of directors or the company has asked the shareholders to pay rupees how much? Rupees 80 in the form of application money, allotment money, first call, second call, like that. So far the company has called up how much? Rupees 80 per share. This rupees 80 is called as called up share, called up capital. This amount is called as called up capital. Assume out of 50 crores, the company has already called to pay rupees how much? 30 crores. But as and when the company makes a call, some of the shareholders may fail to pay the call money. It is quite possible, because if the shareholder has some problems, due to such problems he may not make the payment of call money. After giving due notice, his shares will be cancelled by the company as per the Companies Act of 2013. That is different thing. 30 crores is the amount called up by the company. After that, I told you some of the shareholders will fail to make the payment. That is why here I will take 29 crores amount is collected. Assume here 29 crores amount is collected. Actually, company called up for how much? 30 crores, but company collected only 29 crores. Therefore, this is called as paid up capital, actual amount which has already been paid by the shareholders. Then next part is called as uncalled capital. Called up capital is how much? 30 crores. Just you go through here. Subscribed capital 50 crores. Out of 50, only company wanted to collect how much? 30 crores. Therefore, 30 crores is called as called up capital. And what is the remaining balance? 20 crores. Right? Out of 50 crores, company has already called for 30 crores. Remaining balance of 20 crores is called as uncalled capital. Uncalled capital means company may call in future to collect this amount. Next one is reserve capital. What is the meaning of reserve capital? Reserve capital is a part of uncalled capital. Try to understand here. 20 crores is the uncalled capital. Out of this, company may decide to keep as reserve 5 crores. 5 crores. Understand here, reserve capital is a part of uncalled capital. Uncalled capital here is 20 crores, and the company's directors have decided to collect rupees 5 crores at the time of winding up of the company. Okay, here what is the meaning of reserve capital? Reserve capital refers to the capital which the company will collect at the time of winding up of the company. Therefore, out of 20 crores, that is the uncalled capital, 5 crores will be collected by the company only at the time of winding up, at the time of closing the business. See, these are the different types of capitals which we come across. Try to understand this one. I hope you understand the concept. If any doubt is there, you can send the message and comment, and better you share this video even to your friends so that they can also get the benefit of this. Thank you.